What happened? What did they cite as the reason for the big decline in trading revenue?
So they didn't give a ton of color. Equities, if you exclude some of the mark-to-market gains that they've had in the past, were basically flat. And really just saying that the drop in FICC revenue was because last year was so strong. Last year we had Brexit. Once that was kind of decided, the markets really resumed. And so they're saying it was a tough comp for this year.
Right. Okay, tough comp for sure. Did they give any idea of how this current quarter is shaping up for them?
They did not. And so it's kind of interesting. They don't have September. And last week we heard from a lot of the other big banks who said, if we really want to turn this quarter around, we've got to count on September. And so it'll be interesting to see how things shape up for JP Morgan's and Goldman Sachs of the world next month.
So, Charles, it doesn't look good so far. The reports we've gotten from the banks when it comes to trading has been pretty gloomy. What's going on?
Yeah, analysts have been trimming their third quarter estimates because of the weak trading environment, and they are expecting that FICC trading, fixed income commodities and currencies, will be down 20% plus or minus year over year, with equities being flat to slightly up. So what we're seeing is the traditional end-of-cycle rotation where we're moving from FICC as the driver of capital markets revenues to equities and M&A.
Well, what was interesting, though, for Jefferies, Charles, is the bond trading revenue fell 27%, but the outlook some of the big banks gave us last week was much lower than that. Looking at, say, a 15% drop over at Citi, maybe anywhere between 15 and 20 from JP Morgan. Do you feel like those estimates are optimistic?
No, I mean, keep in mind that the big banks will have September in their third quarter results, and September tends to be a stronger month. So Jefferies was really reflecting a lot of weakness in July and August.